Hi everyone, it is Eddie here from Dilleen Property Group. Just getting back to a few people that had a few questions for me, and one of the questions was, what are the associated expenses along with purchasing property? The ongoing costs. What is that, and what do they usually equal up to besides a mortgage, of course? So a bit about that. Like every single property that I've purchased over the years. And that anyone purchases, you're going to pay council rates, which is one. So council rates, they can easily add up to between $1,000 to $1,500 a year, depending on what council it's located at, and that kind of thing. So council rates is one of them. You usually get those quarterly. Then you're going to have to pay that. So you're going to have to make sure your rent's high enough to cover your mortgage and that as well. Water rates is another one. So you're going to have associated water rates, whether it's a townhouse, a house, or a unit. Usually it's a bit more, and it's charged differently if it's a house compared to if it's a unit or a townhouse. So there's another expense there. You're going to have management fees as well. So management fees is one of them. That basically you get charged for that basically through a percentage of the rental income that you have coming in from your property. So say for example that you get $10,000 a year in rental income. So you have a property that rents out for about $200 a week. Depending on where it's located, the real estate agent, whoever you go with, they could charge you between 5% and 10%, depending on where it's located and if it's a metro area or regional or whatever it is. So management fees is one that's also automatically gets deducted from your rent before it touches your bank account. Using a property manager is something I always recommend doing. I don't usually, out of the 10 properties that I have that I purchased, I don't try to manage them myself. I always get professionals to do it. I don't want to waste my time doing that when I can be finding another property to purchase or doing what I'm good at. I'm not a property manager. So insurance is another one, of course. So you're going to have landlord insurance for your properties. You don't have to have them, but you should have landlord insurance, of course, just in case anything goes wrong. So landlord insurance mainly protects the stuff inside the house. Building insurance is another one. So building insurance, landlord insurance, two different things. Building insurance, of course, covers the outside of the house if it's a house itself, and the structural side of it. But if you have a townhouse or a unit, it's a completely different thing. A lot of people don't realize that if you're paying strata on a townhouse or a unit, that usually has building insurance incorporated in it, so you don't need to get that. So a lot of people, they get scared about having to pay strata, where it actually includes your building insurance. So compared to a house, you'd have to get building insurance, whereas a townhouse or unit, you don't have to get it because you've got the strata. So insurance is another one, but if it's landlord insurance, that'll probably be between $300 and $500 a year, depending on who you go with. Building insurance, depending on how much the building is actually valued at, can range between $1,000 a year and $3,000 a year, so or more, whatever the case is. Strata is another one, of course, as we've said before. So strata, whether it's a townhouse or a unit, that can range dramatically depending on what the strata incorporates. If it's a big block of units, small block of units, if it's got an elevator, a pool in the complex, that kind of stuff. But for the ones for the townhouses and units some of those that I own, they generally range between say $1,500 a year to $3,000 a year, depending on what it is. But that's just that's I guess a little bit about how all those other expenses and associated costs besides a mortgage can add up to a lot of different things. And I feel that there's a lot of people who don't focus on the other associated expenses. They only focus on the rent covers the mortgage, and that's all that matters. Where in fact you have to look at the other expenses because it costs a lot of money at the end of the day. All that stuff added up, you could easily be looking between $3,000 and $5,500 a year just on that. So if you've got two properties and your rent is only covering your mortgage, and you have to pay all this other stuff out of your pocket, then you could be losing $10,000 a year. Yes, it could be a tax deduction, but you don't want to lose money, so I don't see why you would do it. But I guess that's just a little bit about the other associated expenses. If you have any other questions, email me at admin@dilleenpg.com. What I use for myself and a lot of people that I work with is a cash flow sheet. So what it has is basically the it's basically a big spreadsheet for, so if you enter in whatever rent you're going to get from the actual property, and you enter in the associated expenses, so your council rates, water rates, management fees, insurance, strata, all that kind of stuff, it'll calculate exactly how much money you obviously got coming in and how much money you got going out and what's left over. So it's a good way of organising things. You can also analyse a property deal that way as well. So if you want if you'd like to have that, email me at admin at Dilleen Property Group, DilleenPG.com, and I'll get back to you and I'll send it through. So thanks for watching, and I'll see you in the next video. Bye.